My name is Michael Guess, as she said. I'm the president and CEO of TradeSafe, and I'm here to share with you how you can actually earn between 2 and 4% average daily return on your investment and never risk more than $100 per contract traded. But keep in mind that it's going to take an objective, rules-based mechanical trading system and professional coaching to finally bring you that elusive holy grail of trading, which is consistency itself. So a lot of people say, Michael, how is that a possibility? Well, I want you to know this is not going to be a pitch fest. Yes, I know we're all here to share something and hope you would check it out, but I want to actually give you some tools you can use today in your own trading. Now, this is being recorded by Renee and her team. I'm also recording this myself, and I want you to know that besides a follow-up email that you will get from us perhaps tomorrow, we're also going to not only have a link to this this video, we're going to have a link to another full video, a full webinar. As you know, there's so many presenters today, we just didn't have time to give you our full presentation. Normally it takes about an hour to an hour and a half. So I'm giving you an abridged version. So that you fully understand everything that's in it, I'm going to say two things. One, watch the full version, which you'll get a link to. That'll be tomorrow. And the other is you're going to get, not only that, a link to scheduling time with me. That's right. I want you to know that you can visit with me on the phone and get professional coaching, a full hour's worth, and nobody will try to twist your arm or close the sale. I don't do that. I want you to come away feeling that you got all your questions answered and that you felt your time was well spent. Now, I'm going to not read all this boilerplate. In the interest of legality, I'm just going to remind you, you can lose money trading. We all know that. But also, I am required to tell you that the FTC says that it is not legal to tell you that I can promise that you'll get specific results. It has nothing to do with trading. This is the Federal Trade Commission about the internet. So if anybody promises results, they're in violation of the law. So I don't want to do that. But I am going to share with you our track record and what you can expect and hope that you'll stay interested and check it out. And as I said, you can reach me not on the phone. In fact, I'm reaching over right now and I'm unplugging my phone so that nobody can interrupt this presentation. But you will get a scheduling link to my calendar and all my times after this is over. So let's get moving here in the presentation itself. The biggest problem that I've found in my 23 years of being a professional day trader, and I've coached over 2,000 students over the past 18 or 19 years, and that is simply this. Indicators are definitely not enough. A lot of people think, to use that line from that old song, she's buying the stairway to heaven. You can't. An indicator or two is not going to do it. I don't care whether you're a day trader, a position trader, or something else. You need a full-blown rules-based mechanical trading system. And that system needs to be Boolean logic programmed into software with no subjectivity, no discretion. If you've ever wondered how come you don't get the same thing consistently like someone that taught you did, that's because theirs wasn't a real system. So from entry to exit, this TradeSafe system is rules-based. It's proven and back-tested over 20,000 trades in 18 years. It has very precise, tight tolerances because close enough really isn't. You'll know before you pull the trigger on an order to the tick and to the second if all the conditions are met, because you'll get readouts, both audible and visual alerts that let you know if it is a true legal trade. And you'll know your risk beforehand. And by the way, our risk is not a fixed amount. It's what's called a logical stop, not a fixed dollar stop. With our system, which is a trend following system, it will give you a variable amount of risk, anywhere from $100 or less per contract traded. That's if you're scaling out. And if you're scalping, it's $70 or less per contract. That's right, we don't use a fixed dollar stop as far as a one-size-fits-all. So you'll know before you pull the trigger exactly what your risk is. And you can say no to the trade. It doesn't do the trade for you. It's 90% automated, but you're in full control. All of this is to give you the consistency that you really have been missing in your trades. And as far as exits go, a lot of people say, well, I'm focusing on getting into a trade. Well, that's what a beginner does. Professionals focus on the exits, and there's no guesswork as to where to get out. Oh, I'll get out at the Fibonacci. I'll get out at market profile. I'll get out at support or resistance. Very inconsistent. All of our exit strategies, and we have 4 separate exit strategies for you to choose from, and they're rules-based, they're predefined, and they're automated so that they'll place your stop, bracketed in an OCO, etc. And it's all based on the strength of the trend. How will you know how strong the trend is? Each and every chart that you'd be looking at has a proprietary indicator that gauges that strength of trend. And the rules will let you know how many of these charts are trending together. You're going to pre-decide whether or not to swing for the fences, to use a baseball metaphor. That would be scaling out. Or you want to just bunt and get on base if all you've got is a serviceable but weak trend. So it's going to boil down to either scaling out or scalping, and there's 2 variations on each. This custom tailored approach is going to give you the highest probability for getting consistent results. This is all possible because of something called cycles. A lot of people say, well, Michael, I know that day trading is easy to do. I know that you can make a good amount of money, but I don't have a lot of time. You know, I don't want to sit there all day and get eye strain and hemorrhoids. I promise you, you do not need to stay glued to your monitor. With the TradeSafe system, part-time trading actually is possible because you do have alerts. It lets you know when you should be paying attention. If you don't have what is called trend agreement among your charts, take a break, fix a sandwich. You'll hear an alert that lets you come back and start paying attention. Or if you don't want to take a break, you can simply switch to a different market that might have trending going on. This is all possible so that you can see the big picture and anticipate the moves. Not one of those, I'm going to white knuckle the mouse and just like I'm playing a video game kind of thing, you know, shoot anything that moves. This is more like a relaxed game of chess. You have plenty of warning. You know what the big picture is showing, the possibilities. And like that camcorder down below, you can zoom in and zoom out. You're using higher chart settings all the way down to your low risk surgical entry chart setting to start your trades with. And this allows you to, when they do agree, to adapt to whatever the market is giving you. Now, in the larger presentation that you'll also get a link to later, I give you all the rules for that. I actually do, so that you can try that out on your own charts. But instead of telling you how to figure it out tonight, I'm going to simply tell you what the settings are that I use for trading, for example, the minis. We all know what the indices are, the S&P, the Dow, the NASDAQ, and the Russell, right? Well, the minis are the futures and commodities version of that, and they do have natural trending tendencies. So here are the rules for if you happen to be day trading the minis. Please keep in mind this system is not designed for the minis exclusively. It works on all trending markets. So if you happen to be trading the minis, try these settings. Here's a rule that will be easy to remember because I teach it with a rhyme. That's called a mnemonic. The minimum is the best, well, let's try it again. The minimum is the 1 and the 3 need to agree. Best is if all 3 are trending together. So you want your 9-minute, 3-minute, and 1-minute charts to be trending together. That gives you the greatest potential for a strong move with a lot of follow through. Now, if all you've got is just the 1 and the 3 trending together, then you still have a serviceable trend, but you don't want to use the same exit strategy. You probably would pre-select a scalp, for example, because you've got a weaker, briefer potential for follow through. This gives you that custom designed approach because now you've got a real roadmap that informs you precisely what your potential is for the trade so that when you do get a signal for a trade, you can actually enter it right away. Now I'm going to go ahead and take you straight away to the charts. If you will bear with me, I'm going to have to pause this for a moment, just a second, and then I'm going to switch away, if you will, from where my presentation is and go to my charts. And now I'm going to show my screen again. All right, now you should be able to see the screen again. And hopefully if you aren't able to, maybe the moderator Renee will let me know, because I don't want to go forward if my charts aren't visible. All right, I'm not seeing anything from Renee, so let's get started. I'm going to give you a brief tour of what you're looking at. The platform that the TradeSafe system runs on is called NinjaTrader, which in my personal opinion is the best day trading platform out there. I've probably used a couple of dozen over the last 23 years. And whether you use TradeStation or any of the other day trading platforms, I know some of you try Thinkorswim. That's really an option trading platform with day trading grafted on. But I recommend NinjaTrader. It is easier to use, it is more powerful, and my system's indicators are written for it. Thanks, Renee. She just gave me some good feedback. Let me know the charts are visible. So let me give you a quick tour of what you're looking at. Even though I've got multiple monitors for my day trading, I can only show you my main monitor. I can't point to another one. So here's where we're going to go. Think of this screen as divided into thirds. The middle third is our primary entry chart, and I'm going to be showing you a trade so you can see how it breaks down and works. This is our 1 minute chart. Now you also get the additional opportunity for other possible entries on these two tick charts, a 233 and a 144. Sometimes they set up separately, sometimes they set up at the same time. But before any setup occurs, you're going to need that little rhyme. The minimum is the 1 and the 3 need to agree, best is if all three agree. Well, here's the one. There's your 3 minute and there's your 9 minute. So let's zoom in on that 9 minute. And as you can see here, as I bring my data box back, wherever I put my cursor, the readout occurs inside the data box in the lower left corner of my screen. This is a fairly clean screen here. It's just got the price action. No, you do not use candlestick theory. I'm just using these because they're graphic and easy to see. And we've got some support and resistance levels plotted automatically to give you context, so if you know you're near anything that could interfere with the trade. But the critical indicator I want to point out down below is this multicolored banded indicator. Now, yes, there is an oscillator that's superimposed over it, but if you can just mentally erase it for now, I'd like you to focus instead on primarily the green color and the salmon color, which is an off red. When the indicator is showing green, you're in an uptrend. When it's showing salmon, you're in a downtrend. And on a very specific bar, like right here, or back here, or right there, those are the separators that let you know when you went, for example, right here, from a downtrend to the green color, an uptrend. And why are there two separate ones here, just like there are there, and so on? That's because we want to hedge our bet. I've got two separate and discrete indicators within this that measure when the trend is changed. One is mathematically based, and the other is structurally based, based on support and resistance. They don't talk to each other. They don't know when the other one is signaling, but I don't care. Whichever one signals first, in this case, right there, it said, hey, we're in an uptrend. The other one, a couple of bars later, said, yes, I happen to agree. Over here, both of them happen to agree on the same bar. That's why the color is black. So it's very straightforward and simple. It's letting you know when you're in a trend. Again, because we don't have enough time here today, I can't show you how it identifies congestion, but it very accurately defines it. And when you have breakouts from congestion, it'll talk to you. Your computer will say NQ, NASDAQ, breakout confirmed. If it goes back into congestion, your computer will talk to you again and say breakout, fake out, and so forth and so on. You get lots of audible alerts, visual alerts, etc., to let you know what your status is. So right now, this chart, this 9 minute chart, the wide angle view, if you will, of this day, which happens to be last Wednesday, is in a downtrend, okay? So let's look and see what the 3 minute chart is doing. It happens to have just started going green into an uptrend, and this time is at 14:27 Central, that's military time. That's about 2:27 in the afternoon Central Daylight Time. What about on the 1 minute? Let's go to the 1 minute here. It is also in an uptrend. It changed right back here at almost 2 o'clock, and it's been in an uptrend ever since then. Now, before I show you the actual setup of the trade, I want to point out one more little window, and it's down here. As I hover over each of these entries, these are the log of all the alerts, whether they're audible or visual. You get a log of the alerts that lets you know which chart, which time, and which market gave you a change of trend or congestion or a breakout. So these are all logged here for you, so you always know. So if you're caught in the kitchen fixing a sandwich, you hear an alert and you want to know, okay, what's going on? Just go here. Now let's see, since the 1 and the 3 do agree, what a TradeSafe trade will look like. I'm going to slide this over. Here's the price action. This is a moving average. I'm not going to give you all the settings for my indicators here, but this is a simple moving average. And I'm going to draw you an illustration for a moment and say, if you're in a trend and price retraces briefly from a trend, just like this is about to do here, and it's going to retrace down to that moving average, that is as old as dirt. That's been around for decades. I certainly didn't develop that. But the idea of buying pullbacks in an uptrend and selling rallies in a downtrend works very well. But the problem that most people have when they come to me and they say, you know, I couldn't get it to work, that's because there was no precision, no tolerances, and it wasn't a real system. So I'm going to show you how this actually would have worked. We have preloaded an exit strategy called a scale out exit strategy. And once we're in the trade, you will see how it automatically brackets the order with a OCO, that's one cancels other, so that if either the target or the stop loss order is hit, the other is straight canceled. Well, our first rule out of 4 steps to getting into a TradeSafe trade is you've got to have trend agreement. Well, I already showed you on the 3 minute and now here on the 1 minute that we're in an uptrend. So this is a symbolic representation of an uptrend. The second step is a pullback or a retracement to an indicator. That's this one right here. It hasn't happened yet. I'm just letting you know what's coming. And third, because we don't want to put all our eggs in one basket and say, hey, a pullback, that's all we're looking for. I want to have some kind of uncorrelated confirmation, meaning another way of measuring that that pullback will reach its maximum point of excursion. So we're going to go down here where the trend indicator is, and now we're going to look at this oscillator. Right now it's in overbought. When and if we get a retracement to that indicator, we're going to watch to see if it gets into oversold. That gives you the additional confidence that that pullback is probably not going to go any further, and it's cocked and loaded and ready to go with what is called a snapback. Think of this pullback as like a rubber band that's stretched out, and it wants to snap back in the direction of the trend and continue like this. And what we want is the last bar in the pullback, like right there, and you would put an order in just above that, like right here, and as price snaps back through it, you're in the trade. Now, because I can't see what you're seeing, I don't know whether you're typing, I can't see who's in the room, I don't have any feedback, so this puts me at a slight disadvantage. So what we're going to do right now is I'm going to go ahead and fast forward a bit. I'm going to take this trade, it's on replay right now, and I'm going to watch it as it retraces, and then we'll slow it down as it's just about fulfilling the second and third steps. And there is an alert. You heard the auga sound in the background. That's letting us know that one of the other charts, one of the tick charts, is changing trend to down. But we're on a 1 minute chart, which is still in an uptrend, and it's trying to retrace to this indicator right here. We're going to give it a little more time. I don't want to speed it up too much because it's only a few minutes away from when it should be fully retraced. There we go. We're almost there. And I'm going to slow it down a little bit more right now. Now, please notice that if I click to the right of this bar as it is ticking down, look in the data box right here. Just a moment. Sorry. Did not expect that. I should have had my cell phone turned off. But to finish what I was saying, as I click to the right of this bar right here, notice in the data box in the lower left corner of my screen that there is something called risk amount. There's another entry that says Rule 21. Rule 21 is right here. Risk amount is there. Now, we want to have precise tolerances. We want to know that if this is retracing down to this indicator, what if it didn't quite reach, like right there? Notice that the Rule 21 says the number 3 in the data box. That means it's 3 ticks away. Well, we definitely wanted to have a specific tolerance. I can't tell you what that is. You learn that when you are being trained in the system. This one right here is actually touching, and we are oversold. So this could be a setup bar for placing a trade. That's right, the risk is our 4th step. You can't have more than $100 risk. Notice right there what the risk amount says. So we're going to wait and see if this bar here goes any lower. If it does, that'll be the new setup bar, because we want the bar that is deepest in the pullback, furthest in the pullback. If that's the case, then we will put an order a tick above the high of that bar. So we're going to wait a little bit longer. I'm actually going to speed it up ever so slightly. And oh, another bar went a little bit lower. So this bar right here right now is showing 30 on the risk. It's showing it's 3 ticks away from the 21. We're going to wait until it's almost finished. You don't want to just, when conditions are met, place an order, because as it finishes, the risk might increase. So you look down here, and it's telling us we've got 20 some seconds left on this 1 minute bar. There's no rush. We've still got, oh, now it's touching the indicator. So we're going to keep our cursor 1 tick above the high of that bar right here. And when the time comes, we're going to place an order. Now I'm going to show you what the order is by pausing right now with 5 seconds to go. Here's how it works with NinjaTrader. Instead of using a depth of market, DOM, or DOM as it's called, that's a price ladder with 2 columns of numbers that you click on one or the other to either place a buy or a sell order at a price level. Well, that's a little complicated, and you have to take your eye off the ball. I like being able to place my order directly on the chart. So right now, 1 tick above this bar's high is here at 59.03 even. Watch what happens when I right click, a menu pops up. We're going to ignore everything except this last order of the 3. It's letting us buy on a stop limit order. That's right, a stop limit order, so there is no slippage. 4 contracts at a price of 59.03. So listen as I click.
Order pending.
And you could hear the lady in the background saying order is pending. And right here, graphically showing you exactly where your order is. Isn't that nice? Is a repeat of that. You are buying 4 contracts on an SLM, a stop limit. And if you change your mind before it hits the order, you can click here.
Order cancel.
And do that. But we're going to keep it, bring it back.
Order pending.
And we're going to slide this back under so you can watch it as the trade begins. So I'm going to go ahead and turn this back on. And when another bar trades up through that resting order, that will trigger the trade, as well as an OCO, one cancels other, bracket order. You'll see 2 more lines of You'll see 2 more lines appear, and I'm pausing so I can show them to you. This line down here is your stop loss order. It's $100 value beneath where you entered right there. Your target here is $50 just to scale out and take some money off the table. We want an easy to reach target that gives a super high probability of having a winning paid for trade. One more thing. Like I said, we don't use fixed dollar stops. So watch what I do as I grab this, and it's portable, it's movable, it's a phantom. I'm just going to bring it up to the bottom of the bar and back off 1 tick. Now, if that had been a much smaller bar, then that risk would have been much smaller also. Right now, I've got only a $90 risk instead of $100. If it was a lot smaller, I could have had $50 or $60 risk, and I can promise you my stops are not too tight because they're logical stops. Now, let's see if we hit the target. Let's turn this back on and get moving here. And I'm going to try to pause this as it gets close because there's an algorithm, my friends, an algorithm that will cancel and replace that stop. It'll move your protective stop up to break even where you entered and one take a profit. And that will keep you from having a potential winner turn into a loser. So if, let's say, you don't go through here and get the fill and instead turn around and go down here, oh, that's frustrating. You would have had a loser, and it was oh so close. Watch this red line as I turn it back on. Watch it get moved. Got to give it a little more time here. I'm on normal speed. Here it comes. I paused it. You see, it moved all by itself. There is the automation. I didn't have to do that. You are now hedged. This simply means that you have a can't lose trade. Even if it doesn't go through the target and instead turns around and scratches, you've still made $20, enough to pay your commissions and still have lunch money left over to add to your account. So let's go ahead and let it trade through the target filled, she said. And right here shows you exactly where the order got filled, where we scaled out. This is where the trade started. And also, I want to point out something else. We started with 4 contracts. Now, we took 2 of them off the table and made $50. Automation kicked in again, and you're hearing alerts in the background. I have to talk around them. But we're now down to 2 contracts remaining in this trade. It did it automatically. It's pre-programmed. You don't have to do those things. So if we've made $50, that's not a lot of money, but at least it's not a loser. How can we make more money from a trade that has potential for follow through? Because we had trend agreement. Think of it this way. Your entry time frame is already trending. You expect some follow through. But if a next higher time frame that cycles base, the 3-minute, is also trending in that direction, then guess what? You've got the wind at your back, and that gives it that much more potential for follow through. So what I'm going to do is speed it up a little bit, and I'm going to show you an indicator that is going to show you precisely where to trail your mechanical trailing stop. And when it does get hit, that's where you get out of the market rather than guessing about where to get out of the market. So let's keep an eye on this. I'm going to put it to normal speed again. And this indicator is this series of blue dots right here. It's not what you think. It's something else. It's been completely reprogrammed and repurposed. Think of it as a surface-to-air missile that vectors itself towards where price is. If price has strong momentum, it's going to hang back and give it breathing room. If price starts to falter and backfill, then it's going to rush up and lock in the profit and get the meat off the bone. Okay? So what I'm going to do is lock in my trailing stop. I'm going to bring it right up to that dot and back off 1 tick. The reason why that I'm backing off 1 tick is because I want to be sure that if price hits my trailing stop indicator, this blue dot, and then keeps going, I want to still be in the trade. I don't want to leave any money on the table and suffer from the woulda, coulda, shouldas. So in the interest of time, because I don't have much time left here, I'm going to speed this up quite a bit. I'm going to put it at 20 times normal speed. And please know that I would normally be trailing the stop every time one of those dots appears. When you're doing this with TradeSafe, you'll be seeing a normal speed market. This is on hyper speed, so we can finish this on time. See, I'm still doing it. So you're going to have plenty of time. I'm repositioning it. There we go. But I'm not going to move it each and every dot. Let's just wait until it's about to finish. And by the way, do you notice the time below? It's getting close to 3 o'clock. It's a few minutes before 3 o'clock. The stock market closes at 3. And the futures market, the pit traded contract. Now I'm going to pause for a second because do you see how close this indicator got? Price started stalling and moving backwards, and that indicator moved up. So you would have moved your indicator, your trailing stop right to it and back off a tick. You've got a full 60 seconds, a full minute between each bar, so there is no rush. Please don't worry about that. I'm on fast forward so I can finish in time here today. But speaking of time, 3:15 in the afternoon is Chicago pit time when the market stops trading. So what I'm going to do is take it right up to the wire, and one of two things is going to happen. Either the trailing stop is going to take us out, or I'm going to just manually exit the trade. So let's speed it up a little bit and see what happens. And then we will finish with the trade. I wish I could answer your questions here now, but I want you to schedule time with me just so that you can get all your questions answered. You'll get a follow-up email afterwards, or you can go to my website, which is www.daytradesafe, all one word, daytradesafe.com. Now I'm going to check this time here and see, what is it? It is now 4 minutes after. We still got a few more minutes. I'm going to speed it up even a little bit more, take a chance that I'm not going to miss going to the close. And looking at the time below, it's 6 minutes after, and I could be just trailing the stop here, like right there, and so on and so on. Right now, it's 8 minutes after. So in about 5 or 6 more minutes, I'm just going to go ahead and slow it down to normal, and then we'll take our exit manually instead of the trailing stop, because I have a feeling that this particular trade needs to be closed going into the close of the market, pardon the pun. So we're about 14 minutes after, so let's slow this down. And I'm going to lock in my trailing stop to where it should be, and we're still kind of far away. So I'm going to go inside of what is called Chart Trader. That's right here. And I'm going to get ready to close this. Now the clock is still ticking. I'm going to wait till the last few seconds before 3:15. So we'll wait a little bit. Notice the open profit that we've generated on this trade. This was an actual trade taken in our classroom. Our students made this trade on a less than $5,000 account. That's a huge return. In fact, last Thursday, I did a trade in front of a webinar group that generated, well, actually not one trade, that day, last Thursday, generated, oh, let's close this right now. Let me pause for a moment, and there we go. We closed the trade, and here is your profit, $840. So one trade only, $840. What is that in terms of profit on a $5,000 account? 840 divided by 5,000, that's a 16.8% return on just one trade. Do you know how much money we made last Thursday for all the trades taken? We had 22 signals generated last Thursday. I'll admit that that's more than usual. It's usually around 8 or 10, but we made over 65% return on our account in a single day. All right, I do want to wrap this up so I stay on time. So why don't I go back right now to the presentation, and hang on here. I've got to pick that right spot. There it goes. And pardon me for having to go through all these little machinations. There we are. Now, I'm going to summarize what you would get with the TradeSafe system so that you can have a better idea of what your investment gives you. First of all, it's a trend following system. That's the safest, most profitable style of trading that's been pretty much universally agreed for decades. We utilize time frames, that's charts, settings that are cycle spaced, and they're specifically tuned for the market that you trade so that you get exactly the right setting. You're not going to use the same settings for every single market. All depends on how many minutes there are in the daytime trading session. This lets us adapt to the market conditions. You've already seen we have very flexible risk control, never ever more than $100 per contract traded, often less. You saw the automation in the exit strategies. You know that this is a completely rules-based mechanical Boolean logic trading system. There's precision from front to back. This brings you real consistency. So you say, well, that's great, but you got to convince me, what am I going to be getting for the money? You're going to get a lot more than just the system itself. You know, a lot of people out there claim that, oh, mine is a system. This is A system. Oh, that one's a system. You know what? That's marketing hype most of the time. There are very few true day trading systems that are on the market today. And you know what? They start at about $3,000. Don't worry, I'm not going to ask you to pay that much money. And they go well past $10,000. So even if I offered you the TradeSafe system and you just saw an actual trade we took, that if you have those kinds of trades, you can easily earn your money back very quickly. But even if I only charged you a $3,000 starting point for the system itself, you're going to get a lot more than the other people offer you. They say, well, I'll give you some support. You know, you might read your manual or watch a video or two. I personally, when I consult with my contracted partners in the financial industry, I bill at $500 an hour. It shows here $250. I've had to raise it. You get me for over 300 hours of personal coaching. That's right. That works out to 90 full days of availability from when you first sign up. And instead of reading a manual, you're going to have a weekend webinar. And instead of giving up that webinar, I've taken one I actually did with live students where they asked actual questions, and I recorded that and broke it into small bite-sized chunks so that you can actually learn it very easily at your own pace. Now, so that you don't have to reinvent the wheel and rebuild all those charts the way I had them shown to you, you get all of the workspaces and charting templates included. You're going to also get that proprietary trend indicator that talks to you and gives you audible and visual alerts and lets you know when you're in a trend on each and every chart. You'll know going into your trade with great precision if all of the 4 steps are being satisfied. You'll know when you're in the trade which of the 4 exit strategies that are almost fully automated is the appropriate one to take you to the greatest profit point. So if we add those things up, we're still not done. I want you to know that you are being trained in a real structured environment. An environment that is a classroom environment. It's like going to graduate school where instead of having hundreds of people in a trading room trying to piggyback off of some guru guy and hope that he makes money for you, I don't do that. I don't give you the fish, I give you the pole. I make sure that you're in a structured environment where you graduate from class level to class level. Freshman, sophomore, junior, and senior. You have to fulfill prerequisites. You have to make sure that each thing is satisfied. But overall, it really breaks down into 3 phases. Your first phase is a button pushing phase where when you're in the coaching room with me, it's a virtual environment like this one, you'll at first copy what I'm doing, that's right, and you will learn the mastery of what it takes to do the 4 steps to get into a TradeSafe trade. And you won't be risking any money. You'll be doing sim trading, and you'll be making lots of mistakes on paper. Then you'll graduate and go into a phase 2, where you will already be knowing what to do, except you want to be benchmarked. You see, nobody else out there takes the time to do this. When I say benchmarked, I mean we take this system and we calibrate you and your temperament and your risk tolerance to the system. Everyone has a personality. Everyone trades differently. We're not machines, we're people. Consequently, trader A may be very aggressive and try to get back into the market after 2 or 3 losers in a row. Trader B, after 2 or 3 losers, may freeze up and have analysis paralysis. Well, wouldn't it be nice if you could get yourself calibrated to the system so that you knew exactly what kind of track record you could expect? So you're going to have a statistically viable track record, a minimum sample of 30 trades. And after you're done with picking those best of your best trades, you're going to meet with me offline and we will build a profile together. I'll review your trading history because you will have recorded them in a custom designed spreadsheet that's macroed, that's very granular, that I gave to you. You will have looked at each and every trade's outcome and thought about it and journaled it about why did that trade work or not work, so that if you see those conditions, that context again, you'll be able to say yes or no with clarity if you should see that in the future. When we finish developing your profile, you'll be dialed in. and you'll know which of the charts is the best one that you get the best results. Which of the 4 exit strategies in combination with that right chart is the combination that gives you the high percentage of accuracy that my students typically get? By the end of this 30 trades or better benchmarking phase, most of my students typically are going to get, hold on to your hat, 80 to 90% accuracy, not just break even, a little better than that, 60%. 80 to 90% is quite common with my graduates. And that's when you go into phase 3 and start trading your live account. So when you're in the trading room, you can talk to me. You don't have to type. Like I said, there's only 6 or 10 people in the room at a time. That way you get personal attention. You have a little headset with a microphone, and you can interrupt me in the middle of a trade and say, why did you do that? And you get an immediate answer. And I do something that nobody else does. I give you the personal attention by saying, let me look at your charts. I want to watch you take a trade. I'll critique and coach you through that trade because I can share your desktop. Nobody else does that. So we're in this coaching environment together so that you learn better than you ever have anywhere else. And if you miss some sessions, don't worry. I record them. They're in our video archives. I've got hundreds of hours of coaching sessions that are there. Plus, I've created some special how to do it tips, tricks, and techniques videos that are also bonuses that you get. Naturally, you get a reference guide, full color. It doesn't just teach you the system, it also shows you everything you need to know to be a full-blown professional trader. We don't want you to be low on the food chain. We don't want you to take a knife into a gunfight. We want you to be fully capable of holding your own against the professionals. And to run your trading like a business, I give you a business plan, which you have to complete and return to me. I'll critique it and give you feedback. And I already told you, you know how well you're doing because of the journal and the spreadsheet. That's what tracks your performance. But earlier we mentioned, yeah, what if you get some losers and you start reacting out of an emotional, undisciplined state of mind? Well, in a past life, I was a therapist and I learned some very powerful tools. This one tool that you're going to get in this course will help you neutralize that self-sabotaging behavior. It will help you forge diamond heart discipline so that you can trade as close to being a machine as possible. Well, if we added all of these things up, we're still not done, because I want you to know that when my students go through the benchmarking, they typically generate about $3,000 during those 30 trades. So if you add this all up, you have well over $8,000 in value here. Are we going to ask you to pay anything close to that? No, of course not. Normally speaking, everything you've seen here today goes for $29.95 for the software, the system, the course, the coaching, the trading room, everything and more. But for a limited time, a special offer of $19.95. That's for everything that you've seen here, and it's only for those of you who have attended here today, or if you couldn't make it and you're watching the replay, you're included, but it's good for only 1 week until Wednesday, midnight of next week. Now, in the meantime, please go to my website, daytradesafe.com, and check it out. I don't have a button for you to buy anything because I don't want you to do anything on impulse. I want you to visit with me. You're going to get a video link in an email after this webinar of what you're seeing here now. Plus, we're going to include another link for a full-blown webinar that's longer that goes into greater detail. But I want you to schedule your free coaching consultation, please, and know that I absolutely will not twist your arm or try to close the sale. I won't turn it into a pitch fest. I'll listen quietly and patiently to your questions, and I'll give you a taste of my coaching. And I will want you to know that at the end of that, no matter how you decide to join TradeSafe or not, I will support you in your decision, and I want you to feel that you spent your time wisely. Okay? But this offer closes in 1 week. And I would like you to take a look where Renee has just posted the link. That's the link that you can click on if you don't want to wait to make your decision, or at least you can bookmark it or copy it. So please at least save that link that she is showing you now. And that way you can take advantage of this discount, which will expire in a week. But in the meantime, I really would like you to schedule time with me. You can always do it by going to my website and filling in, your name and your email, and that will allow you to go to the scheduling link. So I wish I could answer questions now. I don't have that ability. I would look forward to answering your questions when you visit with me, but right now I am going to say thank you very much for taking time out of your day to be with me and trade safe.